It's 10 a.m. right here in Lagos, Nigeria. Good morning, good evening. Wherever in the world you're watching from, it's Business Morning live on Channels Television. I'm Ladi Williams. Great to have you join us. Let's drill down straight to the markets now. We see Chicago wheat futures rose more than 2% today, recouping some of the previous session's sharp losses as Russia's missile attacks raised concerns over Ukrainian supplies despite a deal between the two nations. Corn rose 1.2%, while soybeans added 0.2%. Ukraine pressed ahead on Sunday with efforts to restart grain export from its Black Sea ports under a deal aimed at easing global food shortages, but warned deliveries would suffer if a Russian missile strike on Odessa was a sign of more to come. The Commodity Futures Trading Commission's weekly commitments of traders reports also showed that non-commercial traders, a category that includes hedge funds, trimmed their net short positions in the CBOT wheat and cut their net long position in soybeans. And oil prices fell today, reversing earlier gains, but continuing a recent losing streak on concerns that an expected increase in interest rates in the U.S., the world's biggest oil user, may limit fuel demand growth. Brent crude futures for September's settlement dropped 48 cents to $102.72 a barrel, down for a fourth day. U.S. West Texas Intermediate crude futures for September delivery fell 65 cents to $94.05 a barrel, also down for a fourth day. All futures have been volatile in recent weeks as traders try to reconcile the possibilities of further interest rate hikes that could limit economic activity and thus cut fuel demand growth against tight supply from the disruptions in the trading of Russian barrels because of Western sanctions amid the Ukraine conflict. And Flour Mills of Nigeria PLC, one of Nigeria's leaders in the food and agro-allied industry, has been rewarding some of its top distributors and dealers. In its annual customer conference and award ceremony in Lagos, the managing director of Flour Mills PLC, Delvin Hainsworth, said it is necessary to show appreciation to its business partners for demonstrating commitment to the brand. The early event brought together distributors across the 6 geopolitical zones of Nigeria. To take a listen.
Please put your hands together for him.
Flour Mills Nigeria has been doing business in Nigeria for over 60 years in the food and agro-allied industry, all made possible by partners, distributors, and sales representatives. Here in this hall, the food manufacturer is set to reward top-performing business-to-consumer dealers through 108 award categories.
There is nothing we give you here today that is worth what you are doing. Even if it's just a handshake, that we have 880 distributors and we have just 60 of them in this room today speak volume about the caliber of the people that are present here, representing the 800 people that are not in here.
Congratulations to you.
Our purpose is feeding the nation every day. And indeed, we feed something like 33 million Nigerians each and every day in terms of our B2B and our B2C business. So we can't do that without our trade partners, getting them to every nook and cranny. So we bring them here to thank them.
Can we celebrate them, ladies and gentlemen?
Through all the categories, 5 people emerge as overall B2C award recipients. Others also receive various cash prizes, trucks, and a 5-day all-expense-paid trip to Dubai, UAE.
It's a honor well deserved, and I want to seize this opportunity in thanking Flour Mills of Nigeria for doing this wonderful initiative. It's a sort of inspiration. 4 years ago, I didn't win any award, but I was right there sitting in the hall and hoping that one day I will be on the platform winning, and here we come today.
For a consistent winner, there is need to remain at the top.
When you have a award like this, the companies have to put pressure on me to make sure I do more, because I'll never like to come down from what I'm now.
The award ceremony provided dealers present to be intimated with the company's revised profit model for the upcoming fiscal year that will further position all its brands and subsidiaries, such as Golden Penny, as prominent players in the FMCG sector.
And now to our first conversation. Following decision by various fintech companies to shut down their operations of virtual dollar cards from July 18, 2022, customers will be unable to create new virtual dollar cards, fund existing ones, or make online and in-store payments and purchases with them. Let's discuss this and other matters now rising in the fintech space with Rahul Shah, Head Financials Research at Telema. Great to have you join us this morning.
Hi, Laddie.
Yeah, so we're getting used to seeing some pretty negative headlines these days, whether it's about inflation, the equities markets, or global recession. But how are things looking in the fintech world?
I'd like to say that things are going great, but sadly that's not the case. For example, if you look at the shares in the fintech space, in developed market, they're down around half over the last year. In emerging markets, fintech shares are down by around a third over that same period. And that's also starting to feed through into the private market. So, you know, the birth rate of fintech unicorns, which are billion-dollar plus private companies, that's basically halved over the last year. And smaller companies are also starting to feel the pinch. And these aren't, you know, this is not just a theoretical eventuality, but they're real-world implications. So, from a consumer perspective, you might find that companies are giving you, fewer incentives, smaller cashback, smaller discounts. And what we're also seeing increasingly is firms are laying off staff. So there are real-world implications to these negative numbers that we're seeing in the markets.
Right, Rahul, and that doesn't sound good. Do you think the fintech industry as a whole could disappear at some point?
Well, obviously, if you extrapolate current trends, then that's the conclusion you draw on. But no, I totally disagree with that. Yes, there are a lot of fintech firms that are losing money today. But I think the core proposition of the fintech industry, which is basically using technology to bring financial products more conveniently, more cheaply to a broader audience. I think that proposition is still very strong. So what we're seeing instead is that investors are recalibrating the prices that they're willing to pay for a piece of that fintech pie. Just like one analogy would be in the early 2000s, a lot of internet firms went bust, but the internet didn't go away. And we're still finding new ways of using the internet. And I think it's going to be the same for fintech. So the firms that are here today, maybe there are not going to be a lot of those around in 20 years' time, but the products and services that they're developing, we're still going to be using those over the coming decades.
Quite interesting. But what are you seeing for fintechs here in Africa?
Yeah, so Africa is actually an interesting case. It's one of the few bright spots globally. If we look at funding volumes for startups, that's actually up year on year. I think that's the only region globally where that's the case. I think there are two reasons primarily for that. The first is the continent never saw the run-up in valuations that you've seen elsewhere. So, there are only a handful of unicorns on the continent at the moment. And I think the second reason is that we're starting from a very low base in terms of funding flows. So for most African countries, startup funding is a handful of dollars every year per person. In the US, that figure is $800 per person per year. So there's a huge difference. And interestingly, even in the public markets, fintechs in Africa, median share prices are up year on year, and that's certainly not the case elsewhere.
And recently, a fintech company being run by Nigerians acknowledged it failed to maintain an effective anti-money laundering and unlicensed money transmission program over the last 3 years, and that made headlines, last week. How do you see this impacting the Nigerian ecosystem?
Yeah, so again, if we start off with the listed equity space, we already know that investors place a lot of emphasis on good governance. You can see that in the bank sector shares, for example. There's a vast difference in multiples that investors are willing to pay. And I think in the private equity space, previously investors were sort of more in awe of the opportunity. But, news like the one that you just mentioned means that I think investors going forward are going to place a lot more emphasis on well-run companies that are less likely to stand on banana skins and therefore more likely to be able to capture that long-term growth story. So yeah, I think that's going to be one of the implications from an investor perspective, a bigger emphasis on governance. I think also from a customer perspective, things are going to change. I think rather than just chasing the best deals, customers will be thinking more deeply about what the reputation of those companies are, what their purpose is what the company stands for aligned with my own personal goals. And then I think another point that is key to mention is the regulatory environment. I think it needs to be very clear what is wrong and what is right. I mean, that sounds like an obvious point, but often the way regulations are worded these days, that's not always the case. So I think that's also another area that we need a few changes based on the news that you just mentioned.
And do you see, more companies actually facing these kind of problems when it comes to this anti-money laundering activities?
Yes, so what we've seen, the pandemic has been great at kickstarting changes in behavior and moving people onto more digital platforms. But the downside has been that there's also been a huge explosion in the incidence of fraud. And that's something that I think regulators are struggling to grapple with, and also firms. One of the things about fintech is that it can make finance very easy and accessible. But the flip side of that is that criminals can also exploit that. And so getting the right balance is actually incredibly difficult.
And one of the issues some people are grappling with right now is the shutdown of the dollar virtual cards, here in Nigeria for some of these companies. What's your take on that?
Yeah, so I think this, comes back to the fraud points that we've just been talking about. It's interesting that a lot of the firms that have shut down their cards use a single firm called Union 54, which is a Zambian-based fintech. And that company's gone from basically zero to being the biggest issuer of MasterCard in Africa in the space of a couple of years. And the reason they've been able to grow so quickly is that they've partnered with customer-facing companies, such as Flutterway's Barter or Payday or Vesti in Nigeria. And that means that they've lost control of that customer acquisition process. And that's obviously a risk in terms of risk management. So, Union 54 said that they're going through a temporary shutdown to undertake an audit. But that's actually a very drastic step, and I suggest that the problem is incredibly serious. So, look, we'll be getting more news on this, I'm sure, over the coming days and weeks, but for the moment it does look as if Union 54's been on the wrong side of the foul line, but we'll have to wait to get more updates on this. But it's not just companies that have been using Union 54, but others have also shut down, and that suggests that these fraudulent activities are actually quite widespread.
And do you see, because some other platforms are still offering virtual cards now, a couple of them, do you see those ones actually still able to, send out these virtual cards?
I suppose I would imagine that they've tightened their controls quite significantly. So even if you apply, maybe you won't get the card. If they feel that their risk management is up to the mark, then I see no reason why they shouldn't still be issuing these cards. Clearly, from a customer perspective, they're incredibly useful.
Right, and how is we're having FX issues in the country right now. How are they able to still, weather the storm, when it comes to FX issues in Nigeria?
Yeah, so this has been an ongoing issue. When we speak to international investors, this is the #1 issue, and it has been for a couple of years. As to how they're going around it, fintechs are very creative. And as I say, one of the issues is that sometimes regulations aren't always clear-cut in terms of what is and what isn't allowed. And some of them maybe are sailing quite close to the wind. In terms of definitive answer on how they're doing this, I couldn't give one.
Quite incredible. Well, the Fintech Association of Nigeria says the fintech sector accounted for about 63% of funding raised by startups in Africa. That was in 2021. Do you still see the sector getting as much attention going forward with the economic headwinds we're seeing these days?
Yeah, good question. So globally, fintech actually is the biggest recipient of startup funding. And that's because, there's a massive opportunity to improve lives and make money. Fintechs, it's such a broad sector from giving sort of health insurance for $1 a day through to helping multinational companies trade internationally. So there are a lot of economic frictions that fintechs are finding solutions for. And in Nigeria, the opportunity is huge. So there are more financially underserved adults in Nigeria than anywhere else in Africa. And actually globally, it's the 5th largest body of people that are financially underserved behind bigger Asian countries like China or India. So I think fintech is going to continue to be the biggest recipient of cash. But I think 63% is probably a big ask. And one of the reasons for that is down to those sort of economic headwinds that you mentioned. Many fintech models are actually predicated on easy access to cheap money, and that world no longer exists. So a good example is buy now, pay later firms, BNPL. These firms basically give free short-term loans to e-commerce customers. But now that interest rates have gone up, those free loans actually cost more for the company to provide. And the other issue is with inflation going up, people have less money in their pockets because they're having to spend more on food, fuel and other essentials. And that means delinquencies, so people not paying back the loans, that's also becoming an increasing problem. So I think some fintech models will sort of fall by the wayside. Investors are going to be a lot more discriminating about where they put the money. And that's why I think 63% is not likely, but overall I think fintech will continue to be the biggest slice of the pie.
Right, we'll have to see some of them actually re-strategize, at this point. But what should government and players in the fintech sector be doing, right now to, get more investment in?
So I mentioned there's around 70 million Nigerians that are financially underserved. So I think tackling financial inclusion should be one of the big priorities for the government. There are a lot of studies that show that if you bring people under the financial services umbrella, that does help to reduce poverty. So I think that's the key overall goal. In terms of how you go about that, I think the best thing that governments can do is to help support the electronic payments infrastructure in the country, so mobile money, digital payments, electronic wallets, that kind of thing. If you look at Kenya and the example of M-Pesa, that's had a massive positive impact on financial inclusion in that country. And so I think, that's a very good template for Nigeria to work from. So it'll be interesting to see how telcos like MTN, move into the mobile money space in Nigeria over the coming months. For fintech industry players, I think they need to be a lot clearer about what their value proposition is to the customer. So, in days gone by, you'd see fintechs basically giving away their products or even paying customers to use their products. I think those days are gone. So fintechs need to focus very much on where they're adding value, and so hence where customers will be willing to pay for those services. That probably means streamlining the product range. It might mean stepping away from certain areas of activity, such as becoming a B2B player instead of a B2C player. And it might mean losing some independence in terms of partnering with your rivals, partnering with your suppliers, or even partnering with your customers. So these are all tough decisions for executives to make, but if they're not going to make them, then in this environment, the investors will do it for them.
Right, still a lot to watch out for in that fintech space. Well, we'll leave it there now. Raul Shah, Head of Financials Research at Telem. It was great having you on the program.
Thank you. Bye-bye.
Thank you. All right, now, so after the break, it's not news that Nigeria's debt servicing is costing the federal government over 100% of revenue. We'll drill down on this and more. That's next. Do stay with us. This is Business Morning. Welcome back. Still watching Business Morning. Now to our next conversation. The cost of servicing debt surpassed the federal government's retained revenue by $310 billion in the first 4 months of 2022, meaning the Nigerian government is officially spending more than it earns to service its debts. To discuss this, we have Fadekemi Abiru, Editor-in-Chief at Stairs Business. Great to have you. Good morning.
Hi, Laddie. Good morning. Good to be here.
Yeah, great to have you. So we've been getting warnings about this for a while now, but it was projected to happen sometime later on. But we're there now. What does this mean for Nigeria?
Yeah, so I think, like you said already, the latest public sector finances data that we saw last week essentially puts our debt interest payments at, the highest on record. So as a result, the federal government is officially spending more than it earns to service its debt. So just getting into the numbers a bit more. Between January and April this year, the federal government spent 1.9 trillion naira on debt servicing, but only earned 1.64 trillion naira. So just to contextualize that 1.64 trillion naira was just 49% of the government's revenue target. So, and at the same time, we also know that the government has been expanding its debt stock, which is just making future debt servicing costlier, given the macroeconomic environment we're in.
But why is it a big deal that the federal government debt servicing has surpassed its revenue? Most governments actually, at this point, most of them are in debt.
Yeah, so I mean, for a long time, actually, at Stairs, we've been writing about, Nigeria's debt sustainability problem. So I think one thing I should definitely just point out is, it's not such a bad idea if you see the Nigerian government borrowing. I think one of the most famous economists, John Keynes, actually came out with this, counterintuitive idea that during periods of economic hardship or downturn, the government should actually be expanding its spending, like spending more, as opposed to tightening its purse strings. And the reason for that is just this idea that the government is, the economic agent that is capable of, spending at a large scale that would directly improve the welfare of society. And the way for the government to do this effectively would actually have to come from borrowing. But then what the issue then tends to be is, when this borrowing, like the best way to think about whether this borrowing makes sense is when you look at, the ability of the government to pay back, and also who the government is borrowing from. And one of the ways that people tend to measure like a country's capacity to borrow back is the debt to GDP ratio. So that's just the metric for comparing a country's public debt to its gross domestic product. So the assumption that we're using here is that, when you compare what a country owes with what it produces, you can indicate that country's ability to pay back its debts, which is ultimately what matters when you borrow, like I was saying. And if we go by the World Bank standards, Nigeria actually passes this test. So the World Bank recommendation is that this ratio should not exceed 77%. Otherwise, it is assumed that the country's borrowing activity will negatively affect growth. So latest numbers, I think, put Nigeria's debt to GDP ratio around like 23%. But one thing that I really believe is that this debt to GDP ratio is actually an incomplete metric for understanding a country's debt position. So in some of the world's largest economies, for example, they have a debt to GDP ratio of more than 86%. Japan is sitting pretty with over 260%, but you don't see anyone like disturbing them. On the other hand, Ghana has a much lower debt to GDP ratio than Japan does. But, we've already been hearing news about them going to the IMF to talk about a bailout so that they can settle their creditors. So that's basically one of the reasons why it is such a big deal, because the debt to GDP ratio is only telling us half of the picture. We need to think about the fact that the federal government has struggled to meet its revenue targets since 2016. Meanwhile, we keep surpassing our expenditure targets, mostly spending on an inefficient fuel subsidy, these debt service payments, recurrent expenditure instead of like capital expenditure that actually generates real growth and development for the Nigerian economy. I'll also say that one other thing that's also worrying with these debt service payments is the risk of currency devaluations, especially when it comes to our external debt. So because we borrow in dollars, the government actually has to earn much more to pay back when the time comes. even with the managed exchange rates regime that we have, the parallel rates tell you all you need to know about the pressure the Naira is facing with all the spike in demand for the dollar that we have been seeing. So the headline here is like, we think it's bad now, but it's just going to keep getting even more expensive for us to service our debt.
Even with, countries like the U.S. actually raising rates, at this point. So is all of our debt, the external debt, is it mostly dollars?
Sorry, I didn't get that, Laddie.
Most of our external debt, is it mostly dollars at this point?
So our debt is actually made up of external and domestic debt. Nigeria's external debt as a percentage of our total debt has increased significantly. So before 2016, Nigeria raised $1.5 billion worth of Eurobonds. In 2018 alone, that went up to $3 billion worth of Eurobonds. Today, Nigeria has $15 billion in outstanding Eurobonds. Typically, Eurobonds, they have this benefit of having lower interest rates than domestic loans. They also have an advantage over, taking our loans from like the IMF or the World Bank because they don't come with these like strings attached, so to speak. I guess during the structural adjustment period of the, late 1980s and 1990s, you saw the likes of the World Bank saying that, if Nigeria wanted like any loans, we had to adopt like market liberalization policies. Those kinds of strings don't necessarily always work for the country's context. So I get why, any government would not necessarily always want to go down that route. I think even recently, I think it was during the pandemic year that the IMF actually gave advice that, the Nigerian government should work towards unifying its multiple exchange rates as a prerequisite for getting like further financial assistance. I actually think that's a good idea, but
right.
That's a conversation for another day. But essentially the thing with Eurobonds is that, the more precarious a country's fiscal situation becomes, the higher the interest rates the market imposes on its Eurobonds. And, foreign perception on the Nigerian economy right now is not at its greatest. So, and this has been the Nigerian story. In January this year, the federal government raised a $1 billion Eurobond at an interest rate higher than its $4 billion Eurobond in 2021. So you can already see just evidence of these like macroeconomic conditions playing out.
All right. So Fadike, I remember an article that said that each Nigerian, owes about 200,000 naira. Looking at these loans. So looking at this ratio now, how does it impact the average citizen?
Yeah, so I'm trying to think of the best way to start. I think the direct answer to this is just opportunity cost. If the government is too occupied with making its debt service payments, it will have little to nothing left over to spend on infrastructure projects that directly benefit the average Nigerian. That means less investment into education. The long-standing ASU strike that has delayed the university degrees of many Nigerian students is just one illustration of this. The government is too busy repaying our creditors and doesn't even have enough to pay like teachers' salaries or even make meaningful investments in our education system so it can prepare students for the modern economy. I think that's quite sad. There's also like growing risk over our solvency situation. So I talked earlier about how, the debt to GDP ratio appears to put Nigeria in the clear by international standards. But when you actually look at what's going on in other parts of the world, so between 2015 and 2022, the IMF list of high debt risk countries in sub-Saharan Africa has grown from 8 to 23. At the moment, Nigeria is not one of them, so I don't want to give the implication that we are, but that's not saying much because the bar is really low to qualify on that list. Like only a debt default classifies as a debt risk, but we do not need to wait until we get there to sound the alarm. If we just keep borrowing to repay our debts, we could end up in a cycle of dependency, and that just keeps us trapped in a cycle of escalating borrowing and even more debt.
Yeah, quite a bleak outlook there. But what solutions do you think the Nigerian government has at this time?
Yeah, so I believe that something that people tend to overlook a lot is the importance of the Nigerian budget. So when we vote for a president, we're essentially giving that person power to intervene in a way that supports the economy. At Stairs, we've also written about how a government usually has two jobs, either to regulate, to improve the business environment, or fiscal spending. So by fiscal spending, one example can be just looking back at 2020, when a lot of governments were just, injecting a lot of fiscal, for example, like when the US was, handing out stimulus checks to Americans just to kind of prop up the economy and make sure that, people didn't fall to the wayside as a result of lockdown measures. But the main way the government funds this fiscal spending is through the budget. That's what makes it so important. So at the same time, there are inefficient ways of allocating it. And so when I think about solutions for the Nigerian government, the first thing that I want to emphasize is the importance of meaningful spending, right? So I talked earlier about how it's important for the Nigerian government to spend. It's not such a big issue if you're borrowing, if you're actually spending in a meaningful way. And that's just because the government is supposed to create multiplier effect. So 1 naira of spending should lead to more than 1 naira of income in the rest of the economy. So one way to achieve this is through capital expenditure, investing in roads, schools, and healthcare. When we look at the government's track record with allocating money towards capital expenditure, the data doesn't paint a pretty picture. In 2017, the proportion of the budget that went to healthcare was lowered from 6% in 2015 to 4%. And we've mostly hovered around, those low single digit numbers for healthcare budgetary allocation. Meanwhile, if you look at other African countries like Rwanda, Botswana, South Africa, you see them allocating at least between 12% to 17%. So these are just some of the things that the government needs to focus on. If you're focusing on ways to, revive the economy, make sure the economy is getting even more productive, then it means that you can improve your ability to extract revenue, not in a way that places too much of a burden on your average Nigerian, but in a way that, allows you to build that social contract between the government and the citizens. But at the same time, you're also reducing poverty. You're also reducing poverty in society.
Right, and Fadika, inflation is still rising. Central banks are still, tightening and looking to tighten even further. And the income, revenue for the federal government is still squeezed. At this point, do you see us borrowing more?
Yes, because we still have our our debt obligations to meet, and so until the Nigerian government is able to come up with a viable way of basically when we think about that's one of the reasons why I keep overflogging this dead horse around the debt to GDP ratio, but
right.
When we look at the debt to GDP ratio, it's telling us about what the economy is generating, but it's not telling us about what the government is able to take out from the economy. So, we essentially need to see a world where the Nigerian government is getting better at generating its own revenue. I said, that would definitely come from tax revenues, but the way the government needs to apply this is in a way that does not place too much of a burden on small to medium-sized businesses, because that affects the ease of doing business. I know that's something that a lot of entrepreneurs tend to talk about is, duplication when it comes to taxes, not enough transparency. I've also seen a lot of efforts from the Nigerian government to widen its tax base and, try to bring more people in the informal sector in. But, these are also people who have, precarious or sporadic income revenue streams.
So more taxes is not what we need, at this point. Anyway, some analysts have said, it's not a revenue problem, that it's a spending problem. Some say it's also a revenue problem. But I'll have to leave it there. Fadekemi Biru, Editor-in-Chief for Stairs Business. It was great having you.
Thank you, Laddie. It was great to be here. Thanks.
Thank you. All right, now let's head on to the markets now. We have Ini there with the details. Great to have you, Ini. It's a new week.
Yeah, it's a new week, Laddie. Thank you so much. But I mean, as you were discussing there, you know, the IMF had said that we're not going to cross this river until next year. Unfortunately, we're crossing it earlier.
Earlier than
and I always say that we're going to cross it earlier. I mean, we're at the rate we're going, 90-something% of our revenue servicing debts.
Yeah,
now,
just a little while till you get over 100%.
Yeah, exactly, and the implications. Well, let's head to the markets now and see that in the fixed income market, last week the market was kind of really low, quiet, they call it 7 deals. This is for Friday, actually, not for the full week, for federal government bonds there. And then for OMO, that's the open market, there were only 5 deals on Friday, worth about 66.5 billion naira. And then for the CBN bills, we had 51 deals worth 13.5 billion naira. And then we go to the FX. That, of course, is a major factor in all of this that we're talking about what's going on with manufacturing and aviation and all of that. FX is a major factor there. So we see that in the FX turnover, week ended the 22nd, that's on Friday. FX spot had $827.17 million, and a daily change was 165. And then the change there, the week-on-week change, really catches your eyes because it's more than 300%. I hope we'll have Caleb join us to tell us, help us to understand that. For the forwards, it was about 76%. And then for futures, we had over 600, heading to 700, very close to 700. And while for the FX derivatives, it was 456.82% week on week. Hi, Caleb. Good morning.
Good morning, Nini.
Yeah. Good to have you on the show. Well, help us to understand this here. We see the FX sports. Last week, the change week on week was over 300. For the futures, it was over almost 700. For the derivatives, it was almost 500% and a total of 300. Help us to understand these changes because it looks quite huge. What factor drove it this much?
Okay, so a few things have driven the movements we've seen. Part of which is the story around the parallel market and the expectations around the parallel market. You could also tell that the parallel market has been moving quite aggressively in the last few weeks, and especially in the last few days. Because of that, you find that you can see that the futures and derivatives line are actually the ones that contributed most to the turnover. What's happening is that real users of the currency are beginning to hedge their positions against the possible depreciation or devaluation of the currency. The expectation is that given the aggressive movement in the parallel market, we may see that filter into the official market anytime soon. And that's why you have, the manufacturers, the real business people are beginning to, take advantage of that futures market and that derivatives market to actually then, hedge their positions.
So this tells us, I don't know if the thing about the round tripping that the CBN governor has been talking about, does that come into play here?
Round tripping in what way? Round tripping of
FX. People who don't really need it, who buy it for resale and all those kind of transactions.
I mean, people buy FX for various reasons, part of which is speculative reasons. And also, if you also look at the current season we're in, it's the summer season. That also, contributes to the huge demand we're seeing for FX generally. So it's about the other part of how then the market money leaves our official window and then comes back to the private market. We don't see much of that, from the banks. What we know is that, the real users of the currency, the real business people, manufacturers, amongst other people, are able to get access, through the INE window, through the other, channels that the CBN has set up.
And then the CBN governor, the MPC, last week, Tuesday, gave a stern warning about some people who may be trying to use FX, the dollar, most likely, in the movement of money, because of the political season, and then it's easier to carry because you can carry higher quantity with less number. How much of that is playing out here?
Absolutely none of that is playing out here. What is playing out here is simply real business people hedging their positions against, the movement they're seeing in the parallel market. And that's why you've seen that futures and derivatives, position are the ones that have jumped the most.
All right. So for the week, what should we expect? What do you see from your crystal ball?
I wish I had a crystal ball. For the week, we expect to continue to see, demand continue to outweigh the supply. As we know, the largest supplier of FX currently is the central bank, and that's why we expect that demand to continue to outweigh supply. So we see more pressure on the dollar, so to say, and we expect that to persist.
And some people have said that if we have emergence of, the official and the parallel market, we might have a better picture. Do you agree with that?
You mean a unification of the...
Yes, unifying a class or platform.
I think that's what the CBN is trying to do through, NAFEX window that it has created, and the INE window for willing buyers and willing sellers to, come and make things happen there. We will look to the CBN for further direction on exactly how, that unification will happen.
All right, Caleb Alimi, FX dealer with FSDH Merchant Bank. Thank you so much for sharing your thoughts with us this morning. Thank you,
Ini, for having me.
All right, Ladi, it's over to you. And there you see NAFEX there that he was talking about. There was 423. In the parallel markets, Ladi, I learned that the Naira has gone down to about 670 as a Saturday. That's really scary.
Yeah,
really
the market
scary.
we don't like to talk about, but at the end of the day, we still have this. Yeah, it does exist. We still have this FX issues. Hopefully, at some point, they can meet in the middle instead of demand outstripping supply.
Yeah, every time.
Every time. All right, Nate, thank you so much.
Thank you for having me.
All right, so after the break, we head on to London. Do stay with us. Welcome back. We head on to London now. We have Juliana standing by right there. Great to have you, Juliana. Good morning. Well, so Barclays is taking a stake in Copper, one of the most prominent names in the fast-evolving cryptocurrency sector, even as the industry continues to be rocked by a swath of bankruptcies. How are you seeing this?
Good morning, Laddie. Well, that's right, although we don't have much on this story because both Copper and Barclays have refused to comment. But it was first reported over the weekend. I believe it was an exclusive from Sky News, and they're saying that Barclays has joined a consortium which does include the former Chancellor, Lord Philip Hammond, to try and help fundraise for Copper, which isn't a cryptocurrency, but they basically provide some back-end administrative assistance to those who are working within the sector. I believe previously they were trying to raise about $3 billion. That's been decreased. We're not sure exactly how much Barclays will be putting towards this latest round, but it's been described as modest and only in the few millions, which is called modest if you are one of the biggest banks in Britain. We will find out exactly how much was raised and who is involved in the later days, but it does come at a crucial time. As you say, we know there was a kind of a breakneck growth in the cryptocurrency sector that's been hit really hard recently. And of course, as you were stating, there are still regulatory issues, particularly here in the UK, which is why Copper decided to make their HQ in Switzerland and not Britain, because we're just really not sure of how the industry is going to be regulated here. So at the moment, we know very little, but as always, when we know more about the story, we'll let you know.
Right, we'll keep tracking that. Regulation still a major issue in the crypto industry. But it's a new week. What economic data should we be looking out for?
It's a new week, pretty quiet actually. We've got two, I would say, the most key updates that we're going to get is on Wednesday. We've got year-on-year car production data, which is obviously significant because there are still supply chain disruptions, particularly coming from China, because of course COVID-19 hasn't gone anywhere there, and there are some really strict measures, and industry experts are expecting that to have had a knock-on implication for car manufacturers and producers here in the UK. And then on Friday, we've got mortgage approvals and mortgage numbers for the month of June. This is, of course, important because as the Bank of England are increasingly upping interest rates, people's mortgage rates are going up. Is this stopping first-time buyers from getting on the housing ladder? It will be interesting to see that. And then, of course, the most important topic, I think, this this week has got to be the run to become the next tenant of number 10 Downing Street. There is going to be the first public TV debate between the two contenders, Rishi Sunak and Liz Truss, on the BBC tonight. That is going to, of course, have a knock-on effect on markets because, believe it or not, Britain is still a G7 member, still a very industrialised nation, and whoever takes on this poison chalice has got a lot of mopping up to do, starting with the economy. So we'll be keeping a close eye on that.
All right, all eyes on the next tenant at number 10. Thank you so much, Juliana, for the update.
Thank you.
All right, now let's move on to other markets. Now we see in the crypto market, we see the fear greed index inching backward into extreme fear, 30 points over 100. Still extreme fear in that market. It was inching above the 30-point range, but now we're seeing it back at 30 points, and we see market cap $1.01 billion there. It's down about 3.52% this morning. Market cap, the volume traded in the total crypto space, there was $65.44 billion. That's up 4.40%. And Bitcoin dominance still ranging between the 41 and 43% range at this point. Price of Ethereum this morning, $1,519. And we see Bitcoin there, $21,878. Bitcoin price attempted a clear move above the 24,000 resistance zone. However, the bears appeared near 23,800 and pushed the price back down, and we're seeing more downward pressure on Bitcoin price this morning. Let's move on now to the price of Ethereum, $1,519, down 0.36%. Volume traded $18.99 billion this morning. Looking at the top alts by market cap, it's mostly red on that counter. Let's bring in Rume Ofi now, digital market analyst. Hello, Rume. Good morning.
Good morning, Ladi. Good morning.
Good morning. A fresh week. We still see a lot of volatility in that market, and some good news. We see Google Pay is planning to allow customers buy crypto. How are you seeing this?
Wow, that's a very big one, considering the fact that Google Pay, formerly Android Pay, is a mobile service deployed by Google for payment, right? And the amazing part of it is it has about 100 million users. Fusing that to Crypto.com, which has its own figures there. It's about 15 million users as about now. I'm going to see it as a very easy way to do payment. Considering the peculiar situation that we're in the world now, everyone is looking towards contactless payment, right? You don't have to use fiat and some other means that are familiar to us. So that's being implemented. I think it's going to happen this week. It's one of the great things that is going to happen to the crypto industry. All of these put together shows that the numbers of those involved in cryptocurrency are growing. Applications are growing in and out. Although it might not actually reflect on the price, because a lot of people are very attached to the price, either $100,000 or $20,000, even going into $8,000. Or no, that is not how it is supposed to be. It's the fundamental that is most important, and this says a lot. That figure 100 million. If a fraction of that goes into the crypto industry and do payment using that, it's going to make a whole lot of sense in a long time.
Yeah, that's quite interesting. We still have that debate, some in it for the money, some in it for the tech. And I saw a report by Boston Consulting Group. It's saying that crypto users will reach about 1 billion by 2030.
Yes, the appetite for the younger generations using cryptocurrency is very high. Even in our peculiar case here in Nigeria and in the continent of Africa, you can see the amount of people coming in, getting themselves involved, because they see it's quite easy to do transactions. Considering the fact that there are risks actually involved, the adoption rate is growing and education is doing a lot. Considering the fact that cryptocurrency has the capacity for people having to control their wealth as against some other means, like the other time we're talking about the CBDCs and all that, which can be stopped because it is permission blockchain, right? And this is permissionless. You can do certain things depending on the regulation on ground in your country. So all of this put together, if the country at that point in time take advantage of it, try to tweak the regulations towards how their citizens should engage in cryptocurrency stuff. So maybe like through the exchange platforms and some other means is going to aid adoption and also bring in a lot of revenue because you're going to expose people to a lot of projects. You can see the hype around NFTs. You can see the hype around the interest heavily involved from these young people around DeFi and all the applications that are involved in the blockchain space. A lot of blockchain devs are going to be needed in the future. And all of this put together is going to help the economy of any country that sees this as an opportunity going forward.
Right. Well, you know, we can't leave without talking about the price. What are you seeing for price movement, you know, this week?
So this week is very important, Ladi. I must tell you for a fact. You see, on Tuesday, which is tomorrow, the IMF is going to come up with a report. On Wednesday, you're seeing the Fed is going to come up with a report. Initially, some persons were saying we're going to see hike up to 100 basis points, but again, it could be 75 or even if we see 50, glory be to God. But again, also on Thursday, you're going to see companies coming up with their earnings report. You know, then I think about Friday, we're going to see the US come up with their GDP figures. And also, this week is very important. I would like to advise those that are taking heavy leverage on trading, please wait for the market to give you a clear path before you get involved so that you can minimize your risk. Because if you make any mistake or try to preempt the market or try to bet on the market or try to reverse trade the market, at the end of the day, you get your hand burnt. And that is not the way to go about this trade. We need to trade in a way whereby we don't lose our capital because that defeats the essence of it.
Exactly. Well, a lot to look out for this week, and definitely there's going to be some volatility going on, talking about the price of Bitcoin and other cryptocurrencies. All right, Arume Ofi, thank you so much. It was great having you.
Thank you very much, Ladi. It's always a pleasure.
All right, now let's look at the top alts by market cap. That we see is mostly red on that counter. BNB, $253, down 0.71%. We see Cardano there at 49 cents. That's down 0.09%. And eCash there down 4.77%. That's a big mover downward this morning. XRP, that's at 34 cents. Down 0.34%, and top 5 gainers there. We're seeing quite a lean list this morning. SNX there down up 1.55% at $3.35, and we see XDC there 2 cents, up 0.36%, and BUSD stable coins up about 0.05% and 0.01%, showing that traders are moving into the stable coin currencies at this point. Look at the top 5 losers there. We're seeing big losers there. CVX they're down 9.91%. Mina token 68 cents. That's down 8.99%. So it's quite a red Monday we're seeing in the crypto space this morning. All right, that's it for the markets, and that's a wrap on the program. Don't forget to join us by 1:30 on Business Incorporated for more updates and developments in the world of business. Always remember, you can watch this again on our YouTube channel. Just search for Channels Television on YouTube and check the videos section. Thank you for watching. I'm Ladi Williams. Bye for now.